And our speaker today is Caroline Hofmann, and she runs strategy, operations, and investor relations at Republic. Since this January, we're so excited to have her. And I know, Caroline, you're going to go over everything that Republic is and everything that you've done. So I'll let you kick it off, and we can dive right into the content.
Great. Perfect. Hey, everyone. I'm super excited to be talking to you. Thanks, Allie, for the introduction. I brought a couple of slides, mostly not only because I'm a former consultant and I'm just used to slides, but also because I'm a very visual thinker, and it just helps me to talk through slides, etc. I'll try to, Alexi, for you, because you're on the phone, I'll try to give a good voiceover. But equity crowdfunding is super new, and so I thought I'll give everyone a little bit of an overview of what it is, what type of founders is, for what type of founders is it the right fit, how does it actually work, what are the pros and cons, and I don't want to be talking for an hour straight, so I'll keep the presentation short, and then I suggest we open it up for questions, and all of you can jump in and ask any questions. So with that said, let me just pull up the screen. Okay. All right, so super briefly about who you're actually talking to. As Allie said, I'm Caroline. I lead Republic's operations. I do everything from marketing, strategy, investor relations. I'm basically one of two people on the business side full-time, so it's a really broad early startup type of role. I joined the startup world, and specifically Republic, after 7 years in consulting. I spent a lot of time at McKinsey in the healthcare practice. So one of the things I'm also passionate about, is finding the right healthcare companies to raise on Republic. I'm a New Yorker of 6 years after time in Boston, London, Paris, Barcelona. I grew up in rural Germany. For those who wonder where my accent is from, I'm half French, half German. I'm really passionate, and that's one of the reasons I joined Republic. I'm really passionate about helping women founders and really creating a level playing field for women entrepreneurs and women who work in early stage startups and in this ecosystem. It is still very much male dominated in my experience, from speaking to a lot of startups on a day-to-day basis, and also working here at Republic. And last but not least, I'm also an advocate for women to become more active investors. One thing that really struck me when I joined Republic a couple of months ago in January is that 80% of the funds that have been raised on Republic have gone to female founders, but 80% of our investors are men. And I just thought that that was really interesting, and at the same time kind of puzzling, because as more and more, especially millennial women, are main breadwinners or equal breadwinners in their households, men still make a lot of the investment decisions and how they allocate their investment portfolio. So that's a little bit about who you're actually talking to. Republic is an equity crowdfunding platform and a community of founders and investors, and we really believe in democratizing investing. Before a year ago, roughly a year and a month ago, equity crowdfunding became legal. Before that, you basically had to be fairly wealthy to be an angel investor, and the minimum you would be able to invest once you managed to source deals, find deals, was multiple thousands of dollars. And in your experience as founders, I'm sure you've gone through this, but if you're trying to raise money from individuals, the cost of the administrative work associated with raising from individual angels usually doesn't make it worth your while to raise from individuals at lower amounts than $15,000, $20,000, $25,000. And so the idea of equity crowdfunding is really to democratize investing on both sides and allow every founder to do a friends and family round, to involve their early customers, to really get outreach beyond their own community, and for investors to get access to a completely different asset class of that allows them to diversify their portfolio and allows anyone to invest hundreds of dollars or tens of dollars if they so wish in startups, rather than starting at the at least $2,000-3,000 ticket if you invest via a platform like AngelList. So this is an example of a company that had a really successful raise on Republic. Parachute is, to really simplify it, basically a class pass for kids activities. The founder is a woman based in Chicago who is a second-time founder. She was really inclined to do crowdfunding because she had created a donation-based crowdfunding site as our very first startup. She raised $250,000 on Republic, which was almost 500% of her initial goal. And she raised a VC round on the side. In parallel, she raised, I think, close to $1 million from institutional investors. When you hear her talk about why she wanted to do this, it's all about the shared success of letting her early customers and letting her businesses that she partners with share in their success, in her success of a startup, and be part of that growth. And she really has seen this campaign as equally a fundraising campaign as much as it is a marketing. It was a marketing campaign for her, and a very strategic move to do broad outreach and get loyal customers through her equity crowdfunding campaign. So as I just said, right, why equity crowdfunding? It's not just about raising money. It is increasing brand loyalty, because when you raise from people who invest $50, $75, $100, or multiple $100, they will talk about this, and they will talk about the startup as if they invested $25,000. The amount actually isn't necessarily correlated with how invested people are in the success of your venture. So it really basically solidifies an early user base of brand evangelists, brand loyalists, as much as it allows to raise capital. And then equity crowdfunding, as I just said, right, just provides a lot more access to. It's 97% of the population that you can now tap into. Prior to equity crowdfunding, it was 3% or less who even had access to becoming angel investors because they wouldn't qualify. So who raises on Republic? We always say we want tech-enabled businesses with a diverse team that have some sort of mission, and we don't have to always check all of the 3 boxes, but the reality is most of the startups that have raised with us check these 3 boxes in some shape or form. 80% of all funds that have been raised on Republic have gone to female founders so far. I think it's even higher right now because we have 2 female founders raising. And every single campaign that has gone live on our site has managed to exceed their fundraising goal. And when people ask me why is that the case versus some of your competitors, I say, well, first of all, we only accept roughly 10% of all applications or less. We really look at them and say, is this a viable business? Do we think that this is the right fit for Republic? And when we accept them, we really make the founder's success part of our success, and we are 100% invested in making those campaigns successful. So we spend a lot of time thinking about the campaign execution. We spend a lot of time helping the founders prepare an awesome pitch page. We give them advice on the videos. So we're quite hands-on and involved in helping people make that campaign successful. Who backs companies on Republic? So what we've seen is it's a bunch of different groups. One, it's friends and family of the team. Those people are typically the first ones when you launch a campaign who come in. The second one is passionate customers of the company. The example that I gave you about Parachute, Desiree, the founder, basically emailed her entire customer list and said, this is what it is. My campaign is live. I'm raising money for my business. I'm an early stage venture. You're a user of my services. If you would like to invest, it's republic.co/parachute. And what happened to her is she had someone who invested $25,000, and it was a mom who used the service for her daughter. She was a senior executive in a sales role, and she saw that. She said, "This is an amazing business. I really love the service. I want to back it. I think it's a sound business. I'm probably going to make money with it, or I may make money with it." And so it was just a passionate customer and no one that she personally knew. Third, we have a growing community of investors. We have roughly 26,000 users in the Republic community who we promote the offer to, who we invite to join webcasts where we promote the offer. We do social media outreach, we do events, etc. And then our companies also do their own marketing during the campaign. It just lends itself to do more of an outreach and a different type of outreach. So that's the last group of users. So this is a question I get a lot. Can startups still raise venture? And isn't equity crowdfunding something that is viewed as the last resort instead of raising, or because someone was unsuccessful in raising venture? We always say, first of all, no, absolutely not. More and more VCs really understand it well and see the power of equity crowdfunding in terms of building a loyal followership and user base. And they don't see it as a competition or as a signal that the company couldn't get backing. The instrument with which founders raise is actually very founder friendly. So it is equity crowdfunding. Basically, it creates a crowd safe. It's a legal product that ensures that you have a clean cap table. All of your investors are basically one single line in the cap table. They don't convert to equity unless you have an exit through an IPO or an acquisition, or you decide to convert them at a subsequent financing round. So it is a line that basically says crowd safe, let's say $200,000, and it doesn't list 500 investors on this crowd safe. That's basically only if you choose to really dig deeper into, and it doesn't automatically convert. So it's actually more friendly than convertible debt, let's say, and it also doesn't have any maturity date or interest attached to it. And then briefly who we are. We're a sister company of AngelList. I'm sure a lot of you, if you're in the startup ecosystem, have heard of AngelList. Our two founders are alums of AngelList. We work very closely with AngelList too. We are based in New York. We are quite often in the Bay Area, but it looks like all of you are in New York. And then we have a very broad board of advisors of people who've done successful perk-based crowdfunding campaigns. We have obviously the CEO of AngelList, who's a very close advisor, etc. How to raise. Let's get to the really tactical stuff, and then I'll pause and drink some water and let you ask questions. You can raise up to 1.07 million every year. If you're wondering about that number, that's because the SEC adjusted 1 million for inflation, and so it's 1.07. I always say, rounded, it's 1 million. We are very hands-on, as I just said. Everyone asks me, how do you guys get paid? We get paid with a commission. We take 5% off the amount that has been raised through the campaign. So if you raise $100,000, we take $5,000 as a cash commission for this. That definitely at this point doesn't cover all the work we put into making these campaigns successful. And we also would take 2% off, let's say you've raised 100,000 in securities. So we would also hold a crowd safe. And that just means that we are vested in the long-term success of this company. We don't drop you once the campaign is over. We actually want you to stay engaged in the Republic community, post updates to the investors, etc. We have a fairly streamlined onboarding process. It is work because there are financial disclosures that are required, legal documents. It is a regulated type of fundraising. We have some partners we work with, such as iDisclose, to basically make the Form C filing with the SEC as pain-free as possible. We have our own design and marketing team that works on building the pitch page with you. And then it takes, and then once you launch, we help you with the marketing, with fielding investor questions, advising you on how to keep momentum during the campaign, which typically is 2 months. I'll just leave these quotes up there on like some of what's about what some founders said who raised with us, and let me open it up for questions.
I have a question. Can you hear me?
Yes.
I'm curious if there's any guidelines around valuations of the business, or is it because it's safe? It's just there's no valuation until a future.
No, there is a valuation. We ask you when throughout the diligence process. So we do our diligence process, and throughout the diligence process, we will ask at some point, what valuation are you thinking of? We don't really take a view on the valuation you should take. We typically advise if you had a prior fundraising round, to take a valuation that makes sense in the context of how long ago you raised funding. If you told me you want to do your very first raise with a 20 million valuation, no discount, I would say that just strikes me as probably for an early stage venture, early stage startup that doesn't have any revenue. I would say that just strikes me as a ripoff for our investors, and we can't in good conscience bring this to our investors. But we don't, I mean, everyone has come up with very reasonable assumptions. We don't take a view on like whether you set your valuation at 2 million or 4 million or 5 million. As long as the whole package of like how much you're seeking to raise, how you set your valuation, and if you're giving any discount, as long as that makes somehow sense, we say, well, it's up to our investors to decide if they want to invest with these deal terms or not.
Thank you, Caroline. And I was muted before, but I was just saying thank you for the thoughtful overview on equity crowdfunding, and I'm definitely happy to help dive into questions. I know we had one from a woman named Alicia Fawcett. I don't think she's on the call now, but I'd love just to get your opinion on it. She was really curious about equity crowdfunding, specifically for writers. So I'm curious what makes a really good founder in your mind for this type of fundraising, and what are kind of the qualifications that you're looking for?
Yeah, so it's a good question around like freelance businesses, etc. When you offer a crowd safe, or which, as I just explained, converts at exit or at acquisition, or you can convert it at your discretion, but it's not a sort of revenue share model. You buy a small share and it converts at some point in the future. We need to find businesses that have some viable exit opportunities, right? So for a writer, and I just don't see the immediate exit opportunity unless it is going to be the next Harry Potter franchise. And even then, I don't know, it's not that clear cut to me what the exit opportunity is. And that's a quite important consideration when we look at, when we select founders. That's also why we say typically tech-enabled businesses have this type of profile where they can scale, and they can scale to a point where they come to the decision of like whether it's an exit via IPO or acquisition. And obviously, I mean, this is a high risk. It's a high risk investment for all investors, and they understand that. But for a business like a writer's business, or even you will see on other equity crowdfunding sites, for example, coffee shops or breweries, etc., there a revenue share would just make a lot more sense.
Okay, great. Thank you.
I had a quick question. You may have, I had a couple questions, but you may have touched on it. I think you touched on it a bit with some of your answers just now, but I was wondering from the perspective of Republic, what are some of the things that you look for as your criteria for accepting businesses onto the platform?
Yeah, so the very first screen we put on is this a viable business that has a chance to scale? I mean, we're not a VC, and we don't want to be a VC. It's our job as a platform to curate investments who we think our investor community will enjoy and like, but it's not our job to pick unicorns. So we do look for, is this a reasonable business that has a chance to scale? Do we believe that this is a company that has some sort of mission, and it's not just yet another app built by two Stanford computer science grads who received funding because they are in the right place at the right time, right? So we do care about diversifying the ecosystem. Is this a founding team who we believe in and are they hustlers? Will they be able to run an equity crowdfunding campaign? But this is really it. It then goes through a process. We use an outsourced diligence provider in addition to our own diligence, and regardless on whether the campaign moves forward or not, the founders always get feedback. So they get a report and feedback on how their business has been assessed. We share feedback as well, even when we don't accept applicants. But it is a set of like fairly simple filters on like, is this a good business? Will this also help further Republic's mission of diversifying the startup ecosystem? Is this a company we would be proud of having on Republic?
Okay, great. And then had one more question. I'm not sure if I'm going to sort of explain this correctly, but like, especially when you're to sort of explain to friends and family something like this, and to say, well, this is an opportunity now for you to invest as well. What is the kind of, like, how do you explain to the layperson, for example, the average return that they might expect and how long, they should expect to be invested in the company? Like, how do you sort of drill that down in such a way that your average customer or family member would get it?
It's a really good question. And I mean, we're still working on this because it is something we try to do every day, but bringing startup investing to the masses is definitely a learning process. Mm-hmm. So the way we talk about it is, first of all, you should think about allocating your savings, right, in different ways, and not everything should obviously go into startup investing. Startup investing per se is a risky class of assets, and it's a long-term illiquid type of investment, and you may hold it for 5 years, 7 years. The company may go bust. That is just the reality, but your returns are also infinitely higher than if you have your money in bonds and your 401k, right? So I think this first step we say is think about how much you allocate to different types of investments. And that's actually something that typically resonates with everyone I've spoken to, right? Everyone or many people have a 401k or have some savings, and I say, look, they don't bring you much, but you rely on them. Think about what is the small portion that you can allocate to riskier type of investments. And then think about like, what is an amount you're comfortable with that you could totally live without, and you're not going to be upset if it goes bust, but it also helps you back someone who you believe in and really help kickstart a business and be part of a business from the very, very first moment, right? So I always say, I was lucky to do 2 years of business school at HBS, and in my class, there were people who raised money coming out of business school or between their first and second year. If I had been able to invest via equity crowdfunding into a couple of these businesses, I would probably be doing pretty well right now, even if I had just invested $200 here and there, because some of them are just huge. And one is Stitch Fix, for example. Another one is the biggest competitor to Uber in all of Asia. These are huge companies. One is probably valued at well over $1 billion. If this had been available to me, not making a ton of money or not making any money while I was a business school, I would have loved to have this available, and I would have invested $100 or $200, money that otherwise you spend on like a fancy dinner, to back these people who were studying with me and who I wanted to help kickstart their business.
And Caroline, for people who might be dialing in later who are interested in using this as a vehicle on the investing side, what is a typical check size that they're writing, or do you have any background on that?
It really varies by campaign and also by network that people bring in, that founders bring in, and also by maturity of the company, right? So for a very, very early stage company, you will see smaller check sizes than for more mature companies like Parachute that raised at a 7 million valuation. The average investment is around $500. The median is $150. So what we see is you typically have for each campaign a couple of big backers who come in at $5,000 to $15,000 check sizes. And these people actually get the momentum going of the campaign because that brings a lot of confidence. Mm-hmm. And then you do have a decent amount of people who invest $50, $100, $150. And so all of that blends to this $500 average. It depends. You can offer perks with your equity crowdfunding campaign. And what we also see is typically if there's a compelling perk at a certain level, there are a lot of things that like stick to that level. So we had like a company that had something at $129 or another one at $79. You definitely see that people like to get these perks, especially when they can see that they're actually getting a good deal in addition to becoming an investor.
Great, thank you.
And these perks are not obligatory, but they're helpful, especially for the smaller amounts. Someone who invests $15,000 won't care if you give them like a sticker and a free dinner. But for those who invest, $100, $150, if they can get something that is worth $50 on top of their investment, right? That they get, a free cleaning service for Katie, or Karen, I don't know exactly what you do, but We Shave sounds like you do shaving for women. If they get a kit or something like that, these things help, right? They help. It's consumer-facing businesses. They definitely lend themselves well to equity crowdfunding.
Great. I was wondering if, how, like with Kickstarter, you'll say, well, this is what we're aiming to raise $50,000 or so. If you come in below, do you know how like Kickstarter, if you come in below, you don't keep anything, but like Indiegogo, you keep what you raise. Like, how does it work?
It's binary. So if you don't meet your minimum funding goal, which hasn't happened on Republic, then you don't get anything. Typically, we encourage people to set their minimum funding goal at a level that they know they can achieve. So we encourage them to set it at $40,000 or $50,000 because there's really no upside for a founder to incur $5,000, $6,000, $7,000 of costs to get the campaign started, to do the regulatory filings and all of these things, to then basically not get the money. So we don't encourage people to set the minimum so high that they set it as like a wishful stretch goal and then the maximum as a cap. It hasn't happened so far. We really do our best that people hit their minimum.
Great, thank you.
And Caroline, can you speak a little more to ways or maybe examples to which you've helped founders before? I know you guys do a lot of like work in helping their campaigns be successful. Do you have any stories or examples of what you've done for that?
Yep. So we have Fetch fundraising at the moment, for example. What we did for Fetch Find is Jamie, the founder, came to New York recently. She spoke at a panel discussion where our CEO spoke next to the head of diversity recruiting for Shark Tank, as well as a partner of the Female Founders Fund. So that just gave her, and they did a panel about equity crowdfunding and the changes and what the opportunities are. So she spoke side by side with these speakers and got exposure to potential investors. The next morning we organized an investor breakfast. So we targeted all of our New York-based users and said, if you want to swing by, meet the founder, come to our office. We're having coffee, bagel, do this before work, and you can meet our you can meet Jamie at this occasion. And what else do we do? I speak with Jamie, who's the founder, probably twice, 3 times a week. We help her like give her advice on like how to write their investor updates. We do advise her on what type of audience for Facebook targeting works for Republic when we do Facebook ads, so that she can target a similar audience, because in order to like do broader marketing outreach. So we're fairly involved throughout the campaign, really helping them. And then we proactively say, hey, do you want to do another webcast? We do one at launch. Do you want to do another webcast? This is how you should promote it so that your users also join this webcast. And we put this in our newsletters. You should all subscribe to our newsletter, of course. We advertise our events in our newsletters. So there are multiple different ways in like how we work with our founders.
That's fantastic. Katie, do you have any other questions pertaining to your company? Looks like she can't hear me.
Yeah. No, it looks frozen.
Yeah. Well, that was really great, Caroline. Thank you so much for diving in. I mean, are there any other bits of information or things that you would like to close on, just for our viewers who are here now and who are watching the webcast later to learn?
All I have to say is really pleasure meeting everyone. Thanks to everyone for joining. Thanks, Allie, for moderating. If anyone has any questions, you can send them my way. It's caroline@republic.co, and I'm happy to speak one-on-one with people about what it means to do equity crowdfunding, and yeah, happy to help. This is an awesome opportunity for female founders, so I believe in it. I hope some of the Dreamers and Doers Network will too.
Oh yes, this is such a value add to our network. So thank you so much for sharing your time and for sharing what Republic does to our founders who are watching now and later. So thank you so much.
Thank you.
Your time.
Thank you. Bye, Allie.
Bye, talk soon.